Dan. And look, my screens are bleeding red today. But that just means the game is getting interesting.
And I'm Jules, the diplomat in the room, trying to make sure our contracts don't catch fire while Dan plays market chess.
Buck speaking. I've seen enough black ice to know when a storm's brewing, and the weather at the pump isn't looking much better today.
You're listening to Elena, and if the news today feels like a crime scene, it's probably because I'm the one holding the evidence bags.
Solid show today, everyone. Look, we're still digging out from yesterday's news. We went deep on that CIT tariff ruling and the Amazon supply chain rollout, which, let's be honest, is still scaring the hell out of the mid-market carriers.
It really is. I'm still getting emails from accounts asking if Amazon is going to eat their lunch. And Buck, you were basically prophetic about those diesel prices yesterday.
I wish I wasn't. But look, here's the deal. Yesterday's indicators were a warning shot. But today the cannons are actually firing.
Indeed. We are moving from market indicators to market impacts. It's time to look at the collateral damage in the C-suite.
Okay, let's start with the absolute bloodbath in the markets. Look, the bottom line is that Forward Air Corporation, ticker symbol FWRD, just got taken out behind the woodshed. Their stock cratered 38% yesterday. We are talking $10.70 a share.
Oh my God. $10?
It's a locker room blowout, Jules. They posted a loss of $1.09 per share for the first quarter. The street was expecting a scratch, maybe a little bruise. They missed the estimate by over 200%.
Whew, that's a total mess.
It's worse than that. Look, here's the play. The real dagger was the disclosure. They admitted that a major customer, representing $250 million in annual revenue, is walking away starting in 2027.
Wait, $250 million just gone?
Just like that. Poof. Look, this is what I always tell people about relationship freight. If you don't have the handshakes, you don't have the volume. Someone probably underbid them, or they just lost the trust.
Actually, Dan, if I may, it might not be a trust issue as much as a condition issue.
How so?
Well, you see, FTR's Trucking Conditions Index just signaled a massive shift. It fell from a 10.2 back in February, which was a 4-year high, mind you, all the way down to negative 1.11.
Negative?
Negative. FTR is calling it a steep fall-off. They're attributing it to this insane volatility in diesel and a spot market that's basically catching a cold.
So, sort of a perfect storm? You have high fuel costs hitting the expense line and volume drops hitting the revenue side?
Precisely. It makes even a giant like Forward Air look brittle.
But check this out. Look, here's the weird part. The BLS reported on May 8th that we actually added 4,300 jobs in the truck transportation sector in April.
Seriously?
I'm not joking. Total employment is at nearly 1.5 million. That is the strongest single-month gain since late 2022, if you ignore the weird outliers.
I mean, how does that work? The stocks are tanking, the index is negative, but we're hiring 4,000 more drivers?
It's because the big players are playing long ball, Buck. They're betting that this Q1, Q2 softness is just a hurdle. They're trying to build the roster now, so they aren't scrambling when peak season hits.
But for a small carrier, right? A small carrier can't afford to hire for potential. They need to pay the bills today.
That is where the talent cliff happens, Jules. The big fleets can absorb the losses. The family-owned outfits can't. They're the ones feeling the minus 1.11 TCI every time they check their bank balance.
Look, it's a high-stakes chess game. Forward Air just lost a queen. The question is whether they can hold the board without that $250 million.
Well, if you want to talk about holding the board, you have to look at what's happening in Nevada. My thing is, I've been the diesel dinosaur on this show for a long time, but Tesla is finally putting their money where their mouth is.
Oh boy, here we go. You joining the cult, Buck?
Not joining the cult, Dan. But you have to respect the volume. On May 8th, they officially announced the transition of the Tesla Semi from pilot builds to high-volume manufacturing.
High volume? What are the actual numbers?
Here's the deal. They've got a 1.7 million square foot facility in Sparks. Their program director, Dan Priestley, says they're looking at building many thousands of units by the end of this year.
Many thousands?
That's a huge jump from the dozen or so Pepsi has, right?
A huge jump. The facility's being scaled for 50,000 trucks a year eventually. And look, the technical benchmarks are actually moving the needle now. The 2026 production model is 15% more efficient than those early ones we saw.
I suppose that means the range anxiety might actually be subsiding?
Well, they're claiming 1.7 kilowatt hours per mile. But the big news for me, the guy who cares about weight, is the payload parity.
No way. Those batteries are like lead anchors, Buck.
I'm telling you, Dan. They shaved 1,000 pounds off the early test units. They're saying the long range, the 500-mile version, is now at effective parity with a diesel day cab.
Incredible.
And their pilot fleet, it just surpassed 13.5 million cumulative miles. One of those lead trucks is hitting 440,000 miles on the odometer, and it's keeping a 95% uptime rate. That's what's scaring the traditional OEMs. If you don't have an engine to blow a head gasket or a transmission to drop a gear, well, the math starts looking real good.
Look, it's about the infrastructure, though. You can't just pull that into a Love's and hope for the best.
That's the pivot. Tesla just launched Supercharger for Business. It's an industrial-scale, low-cost setup. $20,000 for an overnight charger. It's an investment. But if you're saving 30 or 40 cents a mile on fuel, that ROI happens faster than you'd think.
My thing is the safety of the grid. If you've got 50 trucks charging at once, you're pulling as much power as a small town.
But look at the play, Elena. If you're Schneider or Knight Swift and you control your own power station at the terminal, you aren't beholden to the diesel lobby anymore. That's a strategic win.
It's still silicon driving to me, but the data's getting hard to ignore. When the uptime hits 95%, even an old dog like me has to look at the new tricks.
Well, before we get into the autonomous part of the morning, because things are getting wild in the woods, we have a quick note from the folks who keep our lights on.
Go for it, Jules.
Look, we talk a lot about the chess game of logistics, but staying on top of this much data requires world-class engineering. This show is actually powered by the tech stack developed by Eric Christensen at Neural Network Media.
Look, Eric is the real deal. He's the architect behind the code that lets us pull these reports in real time.
He really is. And if you want to support the engineering that makes the high road possible, please check out the Patreon. Go to patreon.com/Neural Network Media.
You even get a free trial.
You do. And you get access to our daily briefing PDF. Honestly, if you're a fleet manager, that PDF is your cheat sheet for the Monday morning meeting. Support the architect, support the show, and get a head start on the competition. Patreon.com/Neural Network Media.
Thanks, Eric. All right. Jules, you were saying something about wild in the woods?
Yes. So you think highway autonomy is scary? Kodiak AI just said, "Hold my beer," and headed to Canada.
Oh boy.
I'm serious. On May 7th, they announced a landmark partnership with West Fraser Timber. We are talking about autonomous log hauling in Alberta.
Logging?
Logging. They're using the Kodiak driver, that's their physical AI, to transport timber from active forest sites to the mills.
I mean, look, I've driven resource roads. They aren't roads. They're just sort of suggestion of where a road might be. Mud, dust, washboard gravel. How is a sensor supposed to see through that?
Well, Kodiak says their hardware is built for extreme vibrations and sub-zero temperatures. And they're using flatbed trailers for the first time.
This is a brilliant strategic pivot, actually.
Why is that, Elena?
Because it's a closed-loop environment. It's private property or remote resource roads. You don't have to deal with a distracted teenager in a Prius or a complicated four-way stop in a school zone.
Exactly. And West Fraser is desperate. They have a chronic driver shortage in those remote areas. They need a 24/7 supply for the mills to stay efficient.
I mean, I get it, but log hauling is one of the most dangerous jobs in the world. If that AI miscalculates a turn on a mountain ledge, that's not a fender bender. That's a catastrophe.
Look, Buck, that's why it's the perfect test bed. If the AI can handle a 50-ton load of timber on a mud track in a blizzard, then I-80 in Nebraska is going to be a walk in the park.
It's sort of moving autonomy from experimental to specialized integration, right? They aren't trying to replace all drivers. They're replacing the jobs that are so dangerous or remote that people don't want them anymore.
My thing is the liability. If Kodiak is the driver, is Kodiak the one on the hook for the insurance? That's going to be a very interesting courtroom drama if something goes sideways in the brush.
Look, the play here is physical AI. It's not just code. It's sensors that can feel the road. If they can make it work in Alberta, they can make it work anywhere.
While we're talking about dangerous and remote, I need to bring us back to the global supply chain because the map is looking very, fractured.
You're looking at that Iran-China link?
Yes. Since the U.S. naval blockade started in April, the Xi'an to Tehran rail corridor has basically become the most important 10,000 kilometers of track in the world. It's a backdoor rail line. Cargo trains from central China to the Iranian capital have jumped from once a week to every 3 or 4 days.
Look! That's a doubling of capacity in a month.
And it delivers in 15 days. Traditionally, it takes 40 days by sea.
What's it costing?
$7,000 for a 40-foot container. That's a 40% increase in just 3 weeks.
7,000?
Exactly. It's a lifeline price. It's fine for electronics and generators, but you can't move enough grain or petrochemicals on a train to replace what a VLCC tanker carries.
Look, bottom line, it's a bottleneck. It's keeping the lights on, but it's fragile. One derailment in Kazakhstan and the whole system stalls.
And it's not just geopolitical fragility, Dan. We are seeing it domestically, too. Look at Manny Transport up in Canada.
What happened there?
They're in a contested restructuring. It's a case study in what I call maintenance debt.
Oh, I know that one. That's when you skip the oil change today to pay the insurance premium tomorrow.
Precisely. Manny is dealing with safety recalls and high interest rates. They expanded too fast during the boom, and now their fleet is a liability.
Look, this is the talent cliff I keep talking about. If you don't have the cash to maintain the equipment, your safety rating drops. When your safety rating drops, your insurance spikes. Then you're out of the game.
It sort of feels like the handshake world is being replaced by the spreadsheet world. If the numbers don't work, no amount of rapport is going to save you.
My thing is, we're seeing a wave of safety recalls across the board. Millions of vehicles affected. If you're a mid-market carrier like Manny, you can't just take 20% of your fleet off the road for a week to fix a sensor. You go bankrupt.
Actually, that is why we're seeing so many carriers leaning into the AI and the Tesla tech we discussed. They're trying to automate their way out of the maintenance debt.
But look, you can't automate a broken axle. You still need the grease and the grit.
Correct. Complacency is the precursor to catastrophe. Whether it's a blockade in the Persian Gulf or a missed brake inspection in Alberta, the risk is always there.
Well, look, it's been a heavy one today. If you're a fleet manager or an owner-operator pulling out on Monday morning, here's the road-tested wisdom. Keep a close eye on your maintenance schedule. With the market this tight and the maintenance debt crisis real, a single preventable breakdown is more than a delay. It's a threat to your operating authority.
And keep an eye on those forward air numbers. If the big dogs are bleeding, there's going to be a lot of displaced freight looking for a home. Look, be the guy who's ready to catch the ball when it fumbles.
Professionalism isn't an option anymore. It's a survival mechanism. Stay disciplined, or the market will discipline you.
And don't forget the humans. AI might be hauling logs in Alberta, but it's still people making the decisions. Keep those relationships strong.
We'll be back tomorrow. Keep the rubber side down.
Drive safe and keep your eyes on the horizon.
Safe transits, everyone.